All right, guys. Good afternoon, Christian from Tribeca Trade Group, and it is Friday, just before 12 o'clock. So I wanted to put out a quick midday video. I do that on Fridays. I'm just going to make this one publicly available, just to see what people are missing. No, just kidding. Well, first event, there's a risk disclaimer in front of you. Everything that we're talking about is for information purposes only, not giving out any advice or recommendations. So I want to talk about just going into the weekend, just some of the observations that I'm seeing right now in the market. Of course, the coronavirus is paramount right now. I think that people are really worried in terms of where else this is going outside of China. China containment and what's going on in China and so forth is has been in the headlines for a while, and people are watching those numbers and so forth. Also, watching a report that is out there about how many people are in the workforce or how many people are now going back to work, and so these things are interesting. What I've talked about previously is what's been kind of going on with value and growth. It's almost like the chicken and egg type thing, right? I mean, I do believe that the cues were getting to the point where my word that I was using yesterday was stretched, right? When you look at these things, I think anything could have caused the cues, like any bad news could have caused the cues to kind of come back in a little bit, because they were really getting they were outperforming a little bit too far, too much. So I think we're beginning to see that, or we started to see that yesterday, what I call a reversion to the mean, where things kind of come back a little bit. And you could look at this in terms of a few different things, and these are all things that I've gone over before. But if you want to break out value versus growth, you can do that in terms of the large caps, and you could see that we're starting to see this move back now. So how many days is this going to occur where value outperforms on a relative basis? Important to keep in mind when I say relative basis, you have to value can basically doesn't mean value is going to rage and rally hard. It just means it's going to outperform growth as we're seeing today, right? So important distinction. If we look at this in terms of small cap value versus growth as well. Where is my IWN versus IWO? There it is. So we're kind of seeing the same thing there, right? Now, how far does this retrace? We don't know yet, right? We know that this is way below the 50-day moving average, so we'll keep an eye on that. Then, of course, the other one that I was showing yesterday was just outright Qs. I don't think there's that much of there's not much going on in this ratio today, but I think also just good to kind of keep in mind too, IWM versus Qs, and I think IWM is. Oh yeah, IWM is outperforming a little bit. It's actually coming back a little bit. Yeah, it's actually hanging in there. This is the 1 hour chart. Notice it's in value versus S&P. So we're starting to see some boxes get checked, in terms of things that, I think needed to be taken out. There's a virgin point of control, and I'll go over a couple of these things. There's a virgin point of control that's been taken out in the S&P. These were things that we talked about in the pre-market session that we hold every day. The Qs has not been taken out, so that's why I'm not, I'm kind of hesitant to say, okay, go ahead and buy the dip like crazy. It got pretty close to being taken out, very close. So as I'm watching some things, also like the put call ratio, we saw a lot of put buying in the first hour. We want to see at this point more puts being bought. We want to start to see that all that bullish sentiment get washed out a bit and get some fear back into the market. So this is starting to kind of show that right now. So things, I think, again, I call them boxes that need to be checked whenever we have a little bit of a dip in the market. It's also Friday, which has just been very difficult to kind of say, like, the market's going to recover fully. So, for the day, because people are just seem to be not wanting to hold a lot of risk into the weekend. So unless something materially kind of comes out and changes this afternoon, I think just having that patient approach and letting this play out is paramount for me in terms of risk taking. I've added a couple trades today. I've added some things in the healthcare space. First of all, Gilead is seeing the most option activity for the day. I think that is and I could be wrong. Maybe they have a study out, but I think this is because of the coronavirus. The more that the coronavirus is in the headlines, Gilead is working on something, or they're testing a vaccine that who knows if they're going to have success with that. But it just seems like Gilead goes up on these days where there's higher than normal coronavirus headlines. So that's interesting. VRTX, which was mentioned on Kramer last night, kind of came all the way in, so gave us a nice little entry for the day. I've taken a target on a swing trade in this. We'll see if this can continue to go out. I've also added AbbVie. AbbVie is now breaking out to the upside. I like this setup on multiple time frames. Again, I look at the 5 minute, the 1 hour, the daily, and the weekly. And if you look at the daily and then you drill in, I mean, this is making a nice, you see some floating hammer bars here after the breakout. And then on the 1 hour, which again gives me a lot of signals for short-term trading, real nice support in here is starting to work. And I would like to see this push through value. And again, we know we're defining our stop here. 93.50 is where that trade would not work. And then also we're starting to break. We're above value above here. So I think overall, like this market needed to see some type of a pullback. I think growth names got way ahead of the tips of their skis. So clearly the coronavirus is in the headlines, but I think it could have been anything that would that would have brought this out. So yeah, so I'm looking. I've gravitated a little bit towards looking at healthcare and medical device names. In some other plays, the reason why I'm not really going after software plays is because software always seems to be the group that gets hit. Like whenever we've got like one of these growth pullbacks, it seems like software names get hit hardest the most. And we have been seeing some put buying in things like IGV yesterday. This was an order that I talked about in the room yesterday that I think is a good hedge if you're overexposed in this group. But this was an opening trade, $1.5 million yesterday. And then also we've been seeing little bits of pieces of IWF over the last week, which is the large cap growth ETF, which has also been seeing some put buying. All right, guys, so that's it. Main message is just to kind of let this wash out a little bit. Be strategic in what you're doing, making sure that if a trade doesn't work, you've got a support in there. As always, my goal, because I'm positioned more to the long side, is to try to avoid big losses on days when the market is down, roughly around 1%. I don't want to be giving back all of my gains that I've been accumulating for the year. So it's playing defense and being strategic where I'm adding risk and not going crazy, just because there's a dip in the market, because you have to recognize that I know that the majority of the dips that we've been seeing are like, half a day dips, but every once in a while you're going to get that multi-day dip in the market. So let it play out a little bit and be strategic with how you're adding your risk. All right, guys, good luck with the rest of the day and see you back in the